And we kick things off tonight with a major market alert. Stocks plunging as the spread of coronavirus rattles investors. The Dow, the S&P, and Nasdaq all posting their biggest losses of the year by far. The Dow falling 453 points. And it was not just here in the United States. Global stocks also selling off. Every major market in Europe lost 2% or more, as did the Asian markets that were open. Remember, the China markets are closed for the Lunar New Year holiday all week, maybe longer. The economic fear is widespread across many industries and companies, casinos, cruises, airlines, tech, all falling deep into the red. So the question is this: just how much will stocks continue to pull back as this virus spreads? Guy Adami, we hope it does not. If it does get worse on that front, do you expect the equity markets to also react?
Yeah, and obviously we hope it gets better. I mean, it's pretty clear. But I'll say this. We're also attributing this sell-off today in large part to this virus. Maybe it is. Maybe that was sort of the final straw over the last however many months of things happening. But a lot of things that have been taking place long before anybody ever heard of the coronavirus. I mean, we're going to talk about the bond market. Yields have been going lower. The gold market's been going up in a stealth way for the last 6 months. So a lot of these things have been in place. 20 different warning signs, metrics, all flashing red for the broader market. To your point, I guess, maybe this was sort of the final straw in this whole thing, and that's what tipped the scales. If it gets worse, yes, the equity markets continue to sell off to the downside. But, a lot of things have put in place. Even if this virus, even if things get better, I'm not certain the market's going to react favorably towards that.
I mean, to Guy's point, when before this, we were concerned about, just at the end of last year, we were concerned about a recession coming. Then the data got a little bit better. We said, you know what, trade war seems to be into some kind of truce, and things started to turn up slightly. So if you think this is going to continue, the one question you have to ask yourself is how much of an economic shock is this, let's call it slowdown in China, to let's say, either us or Europe? And Europe is probably most exposed economically to China. And is that enough to kind of stop any momentum we had? If you look at some of the numbers in Germany today, the IFO expectations were less than expected. So if you think there's going to be a bit of an economic shock here, then it makes sense that Europe was probably ahead of us in selling.
And we did, Karen, some math on the exchange around oil. But, I think you could do the same just with the numbers, right? $14 trillion economy, so $1.2 trillion per month. Let's say it slows by 25% for 2 months. You've effectively now got $500 billion, if my math is right, that just is taken out. Divide that by the number. There is a way to sort of come at this mathematically, I think.
Yeah, that makes sense. You have to make some assumptions on how long it lasts and how pervasive it is. But to me, the second level question is, how much will the market look through it and say, you know what, we don't really focus on this quarter's earnings. Let's talk about the business going forward. Is it really going to be substantially changed? So I think not for a lot of these businesses. So, I don't, for example, Alibaba, which I've wanted to own for a while, missed it. It went just straight through 200 on its way to 231. This morning it opened below 200. So I didn't buy it right at the bottom, but I bought some today. I would like to own more. I bought Yum China last week. That obviously today wasn't great, but I think that people will look through those earnings and ultimately it won't matter.
Did you buy more Yum China today?
I didn't. I bought Alibaba today, just sort of spreading around. But I really think that this will, in short order, will not be the biggest threat that it seems to be right now. And also, I agree with Guy. We're looking for any reason to sell off. The run we had was just parabolic.
Yeah, I think it's interesting. I think obviously it's pretty unquantifiable to know when the fears about this will end. Right now, if you look at the amount of deaths and how it's spreading, it seems like pretty small numbers. And if it doubled in a week, would that be a lot? If it doubled in 2 weeks, would that be? We just don't know. And I think the disruption to the supply chains is really important. And a lot of the sales, if you're just talking about Chinese consumption, they might not get back for especially a lot of U.S. multinationals who do a lot of business in China, whether it be retailers or, restaurants, that sort of thing. So to me, what I find most interesting about this is that of all the places that this could have happened, China is probably the worst place for the global economy. If you think about the way that their economy is slowing right now and the implications that it has on the rest of the world. BK just mentioned right off the bat. Europe, we know, people keep talking about these green shoots. They're not green shoots. The economic data is at best stabilizing, and that comes after a period of massive, easy money, just again in this mid-cycle adjustment or whatever these central bankers want want to call it. So it's unquantifiable. I just say this, is that the S&P 500 about 2.5 months ago was at 3,000, and a week ago it was at 3,300. That was an awful lot of price appreciation for not a whole heck of a lot of news. And if you're going to attribute it to the back end of the Fed easing and then the truce and the trade war, I would tell you that the unknowable about this situation, and I'm not trying to be dramatic, is the sort of thing that neutralizes any of the benefits that we've gotten over the last couple of months. So to me, when I think about it, is we went up 10% in almost a straight line in the last few months. Could we come back to support an S&P 500 at 3,000? I'd say yes. And if you're one of these strategists who has a 3,500 year-end target, that might be your best scenario to end the year at 3,500.
Okay, a lot to unpack there. Let's take some of that out, a lot of good ideas, and sort of put it into separate boxes. Let's start off with just the macroeconomy guy, because let's just take the world. The world is 4 economies, roughly. I'm being very rough here, okay? You got the U.S., China, the Eurozone, and then pretty much everybody else combined. There are 4 that are semi-equal. China is roughly a third of all luxury goods purchases in the world. The second biggest consumer of oil in the world behind the United States, the biggest importer. If they slow down for 30% for 3 or 4 months, like they did with SARS, and those are the numbers that we had then, will that hurt the rest of the world?
I think it has to. I mean, we're not insulated from those things. I mean, the answer is yes, it will hurt. And coming back to the United States with an economy that's 73% driven by people buying things, and God, you don't want this to happen, but if you start seeing more and more people in the middle of Times Square with face masks on, people are going to start to question, maybe I shouldn't go out to eat on Saturday night. Maybe I shouldn't walk into that Starbucks. And don't think that doesn't happen. Consumer behavior in this country changes on a dime. And if people start to get scared, you see how quickly spending will slow down, which is one of the reasons quickly the politicians are so quick to try to assuage the fears of people, and they have no idea. I'm not suggesting I know, but I'm smart enough to say that I don't know. Don't go out on TV and say, we have it contained. They have no idea if it's contained or not.
Yeah, and somebody at BK equated this effectively, and it's, again, a rough sort of analogy, which is this is Lunar New Year. This is their big holiday. This is big spending, big restaurants, a lot of gift giving. It's supposed to be a happy time. They've effectively shut down many cities from participating in any kind of thing. It's if you want to shut down 11 Chicagos during Christmas week.
Right. Right. And so that's the, again, to the unknown, what economic impact does it have, not just on China, but for the rest of the world? There is some kind of economic shock here, and that's what the market's trying to price in. That's what the stock market's trying to price in. That's what the bond market's trying to price in. But to Guy's point, what's interesting about the masks in Times Square, I went out to lunch today. I'm in Midtown Manhattan. Trillions of dollars are moving around. People are selling off. Yet nobody in Midtown Manhattan seemed to have a problem. No masks in Midtown, no worries. So that tells me that investors aren't pricing in the worst case scenario here, which is probably a good thing.